Okay, so now I'm going to be going through the financial information that all sport business have to do, but particularly focusing on Adidas. Okay, so the Adidas Group is an enormous multinational organization known worldwide and widely accepted as one of the most successful sporting brands today. In 2016, Adidas reported a net profit of over 1 billion euros. Kasper Rorsted stated that it was an exceptional financial year for the company. Net profit is just one of the pieces of financial information which are included in the yearly balance sheet, with each piece helping to provide an overview of the success of a company. The different pieces of information include, so we got net sales, cost of sales, gross profit, operating expenses, income before taxes, net income after tax, total assets and liabilities. It's vital for all this information is accurate because the company needs to ensure that it's moving in the right direction. But also it allows possible investors a snapshot into what they would be putting their money into. Without the accuracy, the business would find it harder to progress and almost impossible to calculate tax the company is required to pay. Okay, so Adidas's total net sales for the year 2016 was calculated at 19.291 billion euros. Okay, so net sales is the total number of sales after deductions that have been made for refunds, goods that were damaged, and possible discounts during sales. For Adidas, the overall yearly sales added up to nearly 20 billion euros. This statistic says a lot about a company, so the fact that Adidas is performing exceptionally well is likely to be attractive to investors, and they may use this number to evaluate any potential investments that they wish to make. Okay, Adidas also broke this number down to allow a greater level of detail in how the business is doing. They did this by firstly allowing the percentage of sales from each region of the world to be shown. Statistically, Adidas made 5 billion of their overall sales in Western Europe, where they performed the best. However, statistically, they only made 779 million euros from sales in Russia. Considering Russia has a population of nearly half of Western Europe, it could be an area which Adidas decide to invest and improve in the future years, because really they should be selling, if they can sell 5 billion across Western Europe, and then they should be looking to get 2.5 billion in Russia if the population's half of that. Adidas also looked at the areas of the company which are performing the best, with the Adidas branded sports good bringing in the majority of the sales, while sister company Reebok failing to get anywhere near that number, with only 1 billion made from sales. This type of in-depth statistical financial analysis allows not only attracts investors, but also allows Adidas to find areas which they can improve and progress on. Okay, so Adidas' overall cost of sales, so it was 9.912 billion. Okay, so this amount includes the cost of materials used in creating the goods, along with the direct labor costs used to produce the goods. For Adidas, this is the cost to make their product and the cost in the mass production. This number is important because it allows Adidas to work out their overall profit. This is also an area in which they will be consistently looking to make savings and reduce the number to allow for a greater margin of profit. However, according to the statistics, this number has been increased since 2015. This is most likely due to a greater demand for their products, which could be linked to the fact that the year these sales were calculated were big sporting years, with the Olympics and the Euros occurring at the same time. This is backed up by the Financial Times reporting an increase of 15% to Adidas sales during the Olympics. Okay, so Adidas' gross profit for the year 2016 was 9.379 billion euros. Gross profit is the amount of revenue made after deducting the cost of goods. This number is yet to deduct the company's operating expenses, which includes payroll, cost of transportation, rent, any expense required for day-to-day running of the business. It's vital for the progress of a company that they keep their gross profit higher than the operating expenses, otherwise they will take a loss for the year. The gross profit of a company reflects the level of profitability and therefore will have an impact on whether anyone will want to invest in the business. Okay, so now Adidas's operating expenses were calculated at 8.263 billion, which, as I said before, is lower because Adidas are a profitable company. Okay, so this is the number, as I said before, that is spent on the day-to-day running of a company. One of the main expenses for Adidas being the colleague payroll, as they have a huge amount of staff working for them top to bottom. This number has increased by over $1 billion since 2015, and this may be an area Adidas would like to make savings in order to improve profit margins. Adidas's income before tax was 1.444 billion euros. This is the amount of revenue Adidas have before they've been taxed. The tax rate for the year this was taken was 20.7%. This means that a fifth of their overall earnings will be paid as income tax. Companies must be very upfront and honest about all their earnings because the punishment for falsifying a tax report is hefty. Okay, then Adidas's net income after tax was 1.019 billion euros. This is the yearly earnings which Adidas have made once all the expenditure and cost of running a multinational business are taken out. The Adidas board were extremely happy with this result, and it's an improvement of nearly 400 million since last year. The profit will be paid out to shareholders and individuals who have invested in the brand, but also paid back into the company to allow for future improvements to take place. Okay, then there's the total assets of the company. Okay, so the total assets were calculated at 8.89 billion. Okay, so an asset is a resource with economic value that an individual or corporation or country owns or controls, with the expectation that it will provide a future benefit. Currently, the Adidas Group has assets totaling around 9 billion. An example of an asset which they hold is the sister company Reebok, from which they could potentially increase the value and therefore increase their overall assets. Finally, Adidas's total liabilities are 9.684 billion. A liability is described as an obligation of a company which has arisen from a past transaction with a company which, once settled, will reduce the overall assets of the company and of Adidas. Okay. This is how Adidas is financed. Okay, so the Adidas Group is a public limited company. As a public limited company, they receive large amounts of funding from share capital, meaning they sell shares of their company. This is an external source of finance. Last year, Adidas made around 200 million euros from share capital. This type of financing has pros and cons when compared with loans and other sources of finance. Okay, some pros: financing via share capital means that Adidas are under no obligation to make regular payments to investors, as it's in the investors' best interest to let their money ride and hopefully increase. Compare this to loans, which have regular repayment dates for their debt. Okay, the risk of the business going under is shared out and not directly on one person's head. So that's another pro. That means because other people have equity in the business and have some money in the business and have shares in it, then if the business did go down, it's not one person who's taking the financial hit, it's multiple people, which is, if you're the CEO, that's a pro. Cons: having to give up profit, and the better the company performs, the more profit they will have to give up. In contrast, loans have a set amount which must be repaid, so you could end up losing out if you have a really, really good financial year. So last year, Adidas did have a really, really good financial year, so it's possible. So they would have had to pay out more from their shareholders than they would have if they'd performed poorly. Okay, if you give up a large amount of your equity, another con, if you give up a large amount of your equity of your company, you could end up losing full control of your business and having less of a say in major decisions. This is less likely to occur when you're giving up smaller amounts of equity like Adidas are. Okay, but if they were to end up giving up bigger chunks of equity, they would have less of a say and they would have to give up a lot of the control that they currently have. Okay, so my conclusion: Adidas is a huge international business which makes billions of pounds per year, has major celebrity endorsements and a popular fan base. It's a good decision for them to give up small amounts of equity to the public to boost their finances. However, a smaller business would struggle to produce as much investment money and would likely have to give up a larger amount of equity in order to produce enough funds, so a loan could be a better choice as a source of finance, okay, for a smaller company, because they don't have the pool that Adidas has. If you're a small company, it's unlikely that lots of people are going to want to invest in you or going to know who you are to invest in. Okay, so now I'm going to be talking about the importance of budgets and how Adidas uses budget and how a budget affects Adidas. Okay, so a budget is an estimation of how much revenue will be brought in minus the amount of expenses which are going to be taken out of company accounts. There are possible outcomes for a business budget. They could have a surplus budget, meaning that their income is exceeding their outgoing. They could have a balanced budget, which means revenue is expected to equal outgoings, or they could have a deficit budget, which means their expenses are expected to exceed their revenue. Okay, now why would you want to keep a budget? Okay, so a budget forces management to plan and think about how the business is going to do in the long term. This means they can set financial targets, which if they don't quite reach, they can look back at their budgets and figure out what went wrong. Okay, also allows the business to assess profitability. This means that if the business is achieving a good level of profit in one area but making a loss in another, they can either try to find a solution or drop the sector of business which is underperforming. This links back to Adidas, who make a huge profit in Western Europe, but a much lower profit in Russia. So in future, they may attempt to find a solution for this. Okay, so it also prevents overspending, as without having a structured budget to adhere to, business could easily overspend and end up with debts. In the year 2013, Adidas spent 12.4% of its 14.5 billion euros revenue on sales and marketing, and aims to increase this to 13% in future years. Without a strict budget, Adidas could overspend in marketing and eat into their net profits. Okay, so sustainability. In 2015, Adidas launched a sustainability strategy called Sports Needs Base. This strategy aims to improve the way the company deals with materials and targets a much greener company by 2020. This strategy will take more out of their budget for now, but Adidas hope in the future that investments will be paid back. So hopefully by investing into a greener Adidas, maybe by looking into solar panels and stuff, eventually the money they save will be made back. Okay, but it might take a few years. Also digital marketing. So according to a marketing magazine, Adidas aims to shift the majority of their marketing budget from television marketing to digital and online video marketing. This was after they lost market shares to rival Nike. Okay, so that's a few ways that Adidas is going to be spending their budget and why it's important to keep a budget.